Is it true that the SEC has been sued for withholding information? What does this mean? And how will it affect the case and prices of XRP? Keep an eye on the news to find out. Greetings, XRP Army, by pushing the like button and subscribing to this channel. We can help to develop the XRP Hut community. Let's take a look at some tweets before we get into the Empower Oversight complaint. To gain a better understanding of what's going on in and around the crypto world, the agency will not comply with all FOIA requests from August. Tweeted at Crypto Law US, at EMPOWRUS, only 2 of the 8 requests received a response from at SEC.gov, saying that no documents were available. There is no evidence that the SEC Ethics Office was ever alerted about Clayton's position with One River, or that Mark Berger will be joining Simpson Thrasher. They look to be attempting to hide something, at least on some level. What is the SEC hiding? Wondered Johnny Deaton, who retweeted it. In relation to these documents, there is no purposeful process privilege that can be asserted. There is no attorney-client relationship, the benefit that applies. So, how are you going to claim any kind of deliberative process privilege? What if there was no policy in place for dealing with cryptocurrencies like XRP, Bitcoin, or Ethereum? The Howey test has demonstrated this for 75 years. It's incomprehensible. This tweet will wow you. At SEC.gov tweeted Fox's Charles Gasparino. The business is now arguing that it has not formally certified $BTC and $ETH compliant cryptos. According to reports, testimony in the SEC versus Ripple case, that appears to be a 180 from not only Bill Hinman's speech, but also former Chair Jay Clayton's regulatory strategy comment. More at 3:45 p.m. at Liz Claman at Fox Business, at Ethereum, and at Bitcoin are all on Twitter. Ripple has responded to the Securities and Exchange Commission's brief with an amended response regarding the allegedly privileged papers. Judge Sarah Netburn will be evaluating them soon to see if they are privileged or not. The defendants, who are represented by attorney Matthew C. Solomon, argue that the deliberative process privilege does not apply because the Securities and Exchange Commission is a public body. The Securities and Exchange Commission has never considered regulating digital assets. A point of contention. This remark is in reaction to the SEC's claim that senior personnel, including former SEC director, were simply expressing their own opinions and not representing the SEC in any decision. A week after Ripple requested the addition of 3 papers, the updated response was submitted. This was determined to be exceedingly important by the defense, particularly the third item, which is an email, the defendant's email chain pertaining to negotiations with a third party who, according to the defendants, received SEC guidance to examine its digital asset using the methodology outlined in Director William Hinman's June 14, 2018 address. The article might be able to prove Hinman's claim. It wasn't just a personal viewpoint. It was SEC policy. This has been a major issue of disagreement throughout the legal proceedings. The SEC sent an email to a third party instructing them to analyze a digital asset using the characteristics mentioned in Hinman's speech, which was merely his opinion. I see your point. Now it's the SEC's turn to be clear. Jeremy Hogan, an attorney, commented on the SEC's contradictions. If Ripple wants to argue that the SEC misled them about the nature of the cryptocurrency, the above-mentioned document could be the proof he requires in his deliberations. Let's return to Empower Oversight's lawsuit for a moment. Empower Oversight has launched a lawsuit against the Securities and Exchange Commission in order to compel the SEC to reply to multiple Freedom of Information Act requests on alleged conflicts of interest by former high-ranking officials and SEC's oversight of cryptocurrencies. In August, Empower Oversight sent a detailed Freedom of Information Act request to the Securities and Exchange Commission, asking any cryptocurrency correspondence between senior SEC employees and their current and past employers. Former senior SEC staffer William Hinman was paid millions of dollars to advise the SEC on cryptocurrency regulation by his previous employer, Simpson Thrasher. Simpson Thrasher is a member of a group that promotes the Bitcoin industry. Ethereum's value skyrocketed after Hinman said that Ethereum was not a security. The SEC then sued the creator of another cryptocurrency, XRP, saying that it was a security, causing XRP's value to plummet by a quarter. Mark Berger, the attorney who filed the XRP lawsuit, arrived at Simpson Thrasher shortly after Hinman. Finally, former SEC Chairman Jay Clayton may have had conflicts of interest when he declared Bitcoin was not a security. Clayton departed the SEC to work for One River Asset Management, a Bitcoin and Ether-only cryptocurrency hedge fund. 6 of the 8 types of documents in Empower Oversight's FOIA request have so far been disregarded by the SEC. Searches for 2 of the 8 categories came up nothing. According to the SEC, Mr. Clayton's conversations with the SEC Office of Ethics Counsel about future positions and potential recusals are not documented. The remaining 6 petitions are still pending. Is there any kind of reaction? As a result, Empower Oversight filed a lawsuit in the United States District Court for the Eastern District of Virginia, requesting that the Securities and Exchange Commission respond to the remaining 6 FOIA categories. The SEC is charged with failing to comply with statutory deadlines in violation of FOIA 5 U.S.C. and unlawful withholding of agency records in violation of FOIA 5 U.S.C. by Hush Blackwell. Empower Oversight has filed 2 FOIA lawsuits since its inception in July of this year, while waiting for the SEC to fulfill its FOIA obligations. Empower Oversight had already battled an erroneous SEC ruling that had imposed additional restrictions. He was eventually able to get a charge waiver for the requests because he was a media requester. Let's take a peek at the XRP pricing on December 11th before we wrap up. A lawsuit filed by the Securities and Exchange Commission to categorize Ripple's XRP token as a security has been the focus of a flurry of unfavorable headlines. Analysts and industry insiders, on the other hand, have recently begun to view the token's risk and reward in a more positive light. As optimism grows that the issue will be resolved, it will be decided in the near future. The price of XRP is falling as Ripple approaches a vital line of support. It is on the verge of tumbling even more. Slicing is an option if momentum does not move to the upside. As a result, the price of the token could drop by 38%, up to 49 cents on the daily chart. The XRP price has established a parallel channel pattern as the cryptocurrency has continued to consolidate. Ripple is getting close to the lower threshold of the dominant technical pattern, which means it's time to buy. There is a lot of support at 80 cents. The token's value will most certainly tumble if it slips below the aforementioned line of protection. The negative trend line on the current chart pattern predicts a 38% decrease from the 49 cents bearish target. The price of XRP will fluctuate a lot before the bears attempt to drive prices lower. Prices will be driven down to the pessimistic aim. Ripple's second line of defense will be the 76 cents low on August 9. Additional assistance. The multi-month ascending support trend line is at 60 cents. And then the trend line is at 65 cents. The 12th of July is the date. If selling pressure increases, the XRP price might drop below 58 cents, the June 25th low, and then to 55 cents, the 78.6% Fibonacci retracement level, before Ripple reaches the parallel channel's expected bearish aim because of the dominant technical pattern at 80 cents. Ripple may be able to negate the bearish prognosis if the XRP price can stay above the bottom limit by reclaiming higher levels, starting with the 61.8% Fibonacci retracement mark at 85 cents. If there is a surge in purchase orders, the 21-day simple moving average was at 93 cents, followed by the 200-day SMA at 95 cents. The initial objective, the price will reach $1.02, which will cross the 50-day and 100-day simple moving averages. Before dropping 50%, the 50-day and 100-day SMA cross at $1.06. What are your thoughts on all of this? Should they or will they make an agreement? What will be the end result of it all? Will this have an effect on the price of XRP? We have 2 more videos for you to watch if you want to learn more about XRP. To check out, go to the last screen. Please consider subscribing and giving us a thumbs up. Also, leave a comment in the box below to tell us what you think the future of this cryptocurrency will be. Thank you very much for taking the time to watch. Look forwards to seeing you in the future video. Please keep in mind that cryptocurrency prices fluctuate regularly, so by the time you see this video, it may have changed to a completely different value. The knowledge, the information presented in this video is not intended to be used as investing, financial, or trading advice. This isn't financial or other advice, and nothing in it should be taken as such. The information presented in this video is for educational purposes only and should not be taken as legal advice, as well as financial advice before making any investing decisions. Conduct your own research and consult with a financial advisor.